And if you can clear that, then I'm in the camp of a very strong October with upside potentially maybe to about.
Hello everyone and welcome to the Daily Crypto. We are back with Gareth Soloway once again, and he is going to share his latest market analysis with us. But before we get started, let's take a look at the Fear and Greed Index for today. As of recording this video, it is at 20, down from yesterday's 24. Currently Bitcoin and Ethereum are trading for 19,962 and 1,350 respectively. With that being said, let's continue with the video.
I think that would be a big event, right? I mean, we remember Lehman. I don't think we could ever forget Lehman for those of us that traded through that period. And it was a dramatic and traumatic event for the overall investing public as we saw markets collapse. What I'm fascinated by today is that we're actually seeing Credit Suisse up on the day, even in spite of all this kind of chatter over the weekend. Yeah. Now, I know the heads of the company came out and defended it, but I do think all right, so check this out. The combination of this plus, and I know we'll talk about the economic data that we got today, but think about how the Fed may be forced to pivot, and could Credit Suisse be part of the reason that they're going to be forced to pivot?
With the Credit Suisse bank stock down over 50% this year, it is sitting in a very tight spot. In the scenario of it defaulting, we might see something similar to the Lehman Brothers collapse in 2008. But Gareth believes the Fed could pivot and stop further rate hikes just to bail out this bank to prevent an economic disaster.
Right now, I'm not looking into it too much, but I do think you have to pay attention to everything right now. I mean, you look at what's gone on with the Federal Reserve, how they've raised interest rates from basically 25 basis points or 0.25% to where we currently are in such a short amount of time. And to me, it was always, and I know I came on a few weeks ago with you, we talked about this. It's silly to me to think that the Fed, how could they not think that there's going to be these ripple effects that are going to cause major issues, right? I mean, it's not like you're going, like Volcker went from 12 to 18%, 50% hike. Here you're going from 0.25% to 3.25%. It's a massive move that's going to rock the system. So again, these type of things, to me, it's going to force them to pivot. It really will.
One can't even comprehend the nature of the Fed raising interest rates by 225 basis points in such a short period of time. Gareth believes the Fed will realize it very soon that they need to do something to save the economy, because the ripple effect caused by rate hikes could serve as a catalyst for a major financial crisis.
I think the next Fed meeting is the 2nd and 3rd of November or something like that. So I think that would be where we would start to see it. And I think the Fed will try to be super careful not to make it too obvious. I think you're looking at a 50 basis point hike instead of a 75, which will show that they're on the down slope. But I think, again, what we're seeing is the market's already starting to price this in, which I think is amazing. For instance, 10-year yield is falling today. The stocks market is rallying. So you're already getting the market to kind of jump on this bandwagon. Now, the question is, if we rally too much, does it then kick up the inflation again because of the wealth effect? I mean, it's just like this whack-a-mole type scenario.
The next Fed meeting will be held in November, in which investors are expecting them to slow down a bit by increasing rates by 50 basis points. This will be a slight hint from the Fed to the markets, indicating that the economy will be growing once again. However, the financial markets have already caught on to it, and we are seeing 10-year bond yields decline while the stock market is heading upwards.
Yeah, so I do think in terms of sentiment, every move down in the market, especially we just recently pierced those June lows before the bounce today on Friday, we pierced them. I do think it takes its toll on sentiment, and there's absolutely funds that are leveraged to the hilt here. So hedge fund world, it's out there. The leverage is ridiculous because, again, their job is to basically give the market or give investors a bigger return than what they could get in the S&P 500. And a lot of them have been programmed for the last multiple years that to do that, you got to leverage up because the market always buy the dip, right? Always buy the dip. And so I do think you're going to see more and more things. I heard the Vision Fund, I think they're unwinding like 30% of the people in that fund. A lot of funds are already starting to unwind because they've taken such drastic hits.
With the recent impulse moves to the downside in the stock markets, investor sentiment was extremely low before the bounce we had on Friday. Even big hedge funds are in on it and are betting big. A lot of them are highly leveraged, which AHS increased their risk significantly. We are also seeing the rare occasion of hedge funds actually unwinding up to 30% of their clients.
And I think it's important for investors across the world to pay attention to mortgage rates because that was the wealth effect, right? You talk about COVID and everyone rushing to buy homes. Interest rates were so low. Everything was, you bought a house and then in 6 months it was worth $100,000 more.
Right.
I mean, so it made people just feel so wealthy where they felt like they could go spend. So for me, it's consumer spending, right? We know the US economy runs on consumer spending, and we have to watch to see as people run out of money from that they saved during COVID, where does that spending come from, or does it really go to the sidelines? So I think those type of things, the jobs market is going to be super key. We have the jobs report on Friday. I expect it to show a solid slowing in the jobs market just based on the lagging effect, how we should have already seen it, but because it's lagging, it probably starts to show up. So like things like that are really what I'm looking for. Economic indicators, we saw the ISM today. That really is, you could argue, kick-started the rally that the Fed is going to have to pivot because it did weaken so much.
The housing market plays a big role in the U.S. economy, and investors need to keep a close look on mortgage rates. Since people are struggling to pay up their monthly payments for their houses, this could be indicating that something big is boiling, and it is only a matter of time before it gets worse.
I'm actually relatively optimistic on Bitcoin right now. I'll pump up my chart here so we can take a look. And what you basically have is this beautiful wedge pattern connecting the lows to the highs here as well. And you can see that we're coming to a head. So what this tells me, when you come to a wedge pattern head, it means you're either going to have a breakout or a breakdown. I think with the dollar potentially topping and the Fed potentially at a pivot point, the short-term pressure is more likely to the upside. So I actually think you'll test this high-end range here. So right over here it would be, so right in this vicinity here, which is around 20,800. And if you can clear that, then I'm in the camp of a very strong October with upside potentially maybe to about 25,000.
Gareth reveals he is bullish on Bitcoin in the short term as it is forming a wedge pattern, which could also break to the downside. But if the US dollar starts to show some weakness and we see the Fed getting less hawkish, then Bitcoin could potentially rally all the way up to 24,000.
So number one, with the most addresses or adding the new active addresses, I'm assuming that has something to do with the merge. Probably the excitement around the merge got people really involved. So that's number one. That's always good, right? The more people involved, the better. Doesn't mean price is going to go up near term, but I think longer term, that is a bullish sign. And if we take a look at the chart here, what we can see is that Ethereum is kind of hugging this lower trend line. And you got this same sort of wedge pattern. It's a little bit of a different shape than the Bitcoin one, but nonetheless, you're hugging this line here, and you want to see Ethereum hold this 1260 level right here.
Yeah.
If it can attack the upside and break out, you got an easy upside target of around 2,000 again. And again, for me, it's the 2,000 level is going to be tricky because you also have the daily 200 moving average up there. But that would be kind of my near-term best up case scenario before maybe some more downside.
Gareth says that the ultimate positive outcome for Ethereum will be the $2,000 level, as it is in a wedge pattern just like Bitcoin. However, it is all dependent on where Bitcoin goes, so it is crucial for Bitcoin to confirm a breakout.
Yes, I agree. Down the line, at some point, the dollar will collapse. I think the dollar, in fact, let me show you guys this chart of the DXY real quick here. I want to just show you guys this because this went right into the perfect analysis of what I was talking about. So, look at this surge up in the dollar and then look at where it halted. And all you have to do is really just draw a trend line, and it gave you where the dollar was going to pull back from. But at the same respect, you have to understand that the dollar still has a lot of downside support. And what we can do is basically draw a trend line here as well. And so, yes, I think the dollar is going to pull back here, but this line here would be the bigger break point. But even if that happens, currencies don't go from being the reserve currency of the world to collapsing overnight.
The dollar has already started to drop lower after touching a strong resistance point. As Gareth showed us on his chart, he expects the DXY to retest the lower trend line. This point will be the deciding factor of where the US dollar will go from there on.
In the next few years, I'm not sure about, but I think in the next 10 to 15 years, and again, I don't know if it'll be the digital yuan or there'll be some new currency. I've hypothesized that, you see the pound trading almost at par with the dollar, the euro trading at par with the dollar. You almost could create a world currency amongst these bigger countries and then kind of have that supplant the US dollar. And again, I don't think the US government would want that just yet. But for me, it's like, if you look at history at how long reserve currencies lasted, we're at the end of that cusp as a reserve currency from when it started. And I think that's something people overlook. I mean, you can look at England when they had it, or when France. I mean, there's so many different reserve currencies. But the point again is that what happens with reserve currencies is that the governments that have them take advantage of that by printing too much. And that is the downfall of the reserve currency. Eventually, people get fed up with it. And they're like, well, why am I buying your debt if you're just going to keep printing?
Historically, dozens of reserve currencies have collapsed out of sight, and we might witness another one during our lifetime. This will not happen overnight, but rather over a number of years where we will let the dollar gradually lose all its power. Thank you for watching this video. Make sure to subscribe to our channel and like this video so we can keep bringing you educational content like this on a daily basis. See you guys in the next video.